Hey everybody, good morning. How we doing out there? It's Doc with Ready Set Trade. Today is Tuesday, the 28th of March. Welcome aboard. Let's see what's going on today. Okay, not much in the way of news. We've already had the Case-Shiller Home Price Index, the FIFA House Price Index. Consumer confidence is coming out at 10 o'clock, so we have to be aware of that. We do have... let's see, Richmond Fed Manufacturing Index. I think the big thing that's happening today is the Senate Banking Committee. And Michael Barr from the Fed is the risk manager, something like that. He is the supervising deputy. Oh, what is the name that they gave this? Hang on a second here. Let's see if I can find this. Yeah, it's under the Fed. It's under the Fed's website themselves. So I've also heard that maybe Jerome Powell is going to testify as well too over the next 2 days. I don't know. This is all going to be around SVB and the little banking crisis that we've recently had, and what we're going to do about it and those kind of things. So I think there is the opportunity to maybe restore a little bit of lost confidence in the banking system over the next day or two. And we'll see if that certainty comes into the market or not in the form of accumulation. And so yesterday we saw a little bit of rotation out of what has been very strong lately, which has been tech, and back into things like small caps, which is why we put on that vertical spread yesterday. All right. Really, well, probably the biggest event for the week is the PCE on Friday. That's going to be important because we want to see whether or not all these little obscure CPI and PPI and PCE and all these other reports that relate to inflation really matter anymore. Does it really matter anymore? Are we going to get these big reports, big movements out of these things, which we have not had in years? In fact, something interesting I put into the newsletter yesterday was if we look at the average S&P 500 move based on the Fed, CPI, a jobs report, right? We can see that back here, the Fed back in 2008, Fed was just huge back here because that was all about interest rate policy. And CPI was of definite interest back in 2008. CPI was really big back then. And jobs was interesting. And then it all sort of went away. And notice how we've had very muted response to Fed meetings and CPI and everything else, especially CPI has been so sleepy lately. But it started in 22. All of a sudden we cared about the CPI. And now we seem to care less about the CPI and a lot more about the jobs in the Fed. So we could see this Friday as to whether PCE no longer retains that, sort of tier 1 status in terms of a risk event. Good morning, everybody. Good to see you out there. Not much in the way of earnings until 2 weeks from now. We have 3rd of May. Now, this is interesting. We're starting to see a 25 basis point rate hike creep up again for 3rd of May. This is weird, though, because when we get to the 14th of June, we're actually looking at a potential cut. That makes no sense at all. And then 50 basis points cut from today's level by the end of the year. Those are Fed funds futures. This week we'll be here till Friday. Invite you to come by every day. Good Friday will be the 7th of April, so that is a week from this Friday, so I recommend you take the day off. Okay, let's see what we can do here today. See what's going on. Let's go into yesterday just for a minute. Here was yesterday's opening range. We gapped up, right? We were pretty strong in the morning. We had some really strong advancers, and then we saw that start to fade in. We started that start to fade. Now, we did take the 0 DTE iron fly because it was in the middle. But I had to punch out after, I don't know, it was maybe 10 or 15 minutes, it just was not moving. And what I saw was the price start to get unstable. It dropped out of the opening range, bounced back in below the VWAP, offering dynamic resistance. And so I decided, hey, let's just get out of this thing. I think we made something like $10 per contract. It wasn't worth staying in. We could have gotten the full profit target, but we would have had to endure this drop all the way very close to a stop before the price came back again. And it would have taken us maybe 4 hours. You know, going for $50 a contract, it's not worth the time. It's not worth the effort to manage something like this. You have to look at this as sort of, how much time do you want to spend doing this? Okay. How's everybody doing out there? It's a quiet room so far today. Good morning, everybody. So we're seeing a little bit of a drop. What I'm going to do is I'm going to go ahead and de-anchor my VWAP from yesterday and tie it to today. All right, so we're just going to tie that into today's price action. So you'll start to see that print from the first thing in the morning, right? So we've got our upper and lower expected moves. Those are going to get moved down more than likely. We're starting to drop a little bit in terms of the futures. Futures are starting to drop just a little bit. Nothing material just as of yet. But it is a long day. It's a long trading day, so long way to go. Okay, we have 2 minutes left to go. 2 minutes left to go. So looking at things right now on the SPX, if we look at our 28 March options, we have very similar to yesterday. We have a 27-point expected move. 27-point expected move, and we've got all that crap happening at 10 o'clock. And it may be difficult for us to get into an iron fly today. What I'm going to have to see is whether or not we have any time decay at all today. If the market holds on to everything, then it may not be worth trading at 10 o'clock. So we're going to have to wait till 10 o'clock, irrespective of what happens, just because there's too many events coming up this morning at 10 o'clock. We have to let those play out first. So maybe a tough day to do zero DTE as well as tomorrow. All right, we have 60 seconds left. 60 seconds left to go. All right, yesterday was a 28.47, so we're just a little bit less than that today. You can feel things are different, though. You can feel there's a different vibe in this market from the last couple of weeks. The last couple of weeks have been difficult with all the banking crisis and, oh no, what's happening here? And sell first and ask questions later. We don't have that. Yesterday was really a very different market experience. So even though we didn't have a whole lot of movement, all right, here's 15 seconds to go. We'll take a look at the larger charts once we get the opening bell, which is coming up momentarily. So we're going to start with a 27 point something expected move. And it's 27.52. 27.52. All right, that is good news. I love to hear that sound. Okay, closed. Let's see, what do we fill that for? 215. All right, so we're going to go look at our gap chart to begin with. You can see here is the ES, and we have this overhead resistance here through these anchored VWAPs. Anchored VWAPs above and below are offering overhead resistance here, and we've got support down here close to the 200-day moving average. So this is kind of the zone that the price needs to get through. Okay, let's look at our gaps. We have a little bit of a gap today. Not much, but worth tracking until it is cleared. Okay, you can see yesterday's close, and here is today's gap right there. That is today's gap. Okay, opening print for today, 4,002. 4,002. So that's going to give us an expected move this morning. Upper is 4029.52. Lower is 3974.48. All right, let's move the upper one down first of all. So that is going to be 4029.52. And then the lower expected move is going to get moved down to 3974.48. There we go. There is today's, you can see today's gap, today's opening range in red. You can also see the volume-weighted average price. Volume-weighted average price is moving to the downside for right now. Okay, let's go put a test iron fly into the analyzer, and then we'll go look and see what's happening with the markets. I'm going to center this around 39.75 for right now, and we're going to make this, ooh, that's not what I want. We're going to make this 30 wide. We're going to make this 30 wide because the current expected move is 26. So we're going to sell an iron condor. We're going to join the short strikes at 39.75. We're going to make this 30 points wide. So this is going to be 4,005. And 39.75 minus 30 points is 45. There we go. That's about a $20 credit. Let's bring this up to today's date. Let's move our price slices out of the way. And there we go. There is today's trade for right now. Now, what I want to do is I want to watch this carefully. I'm going to zero this out. There we go. Zero it out. And watch and see if there's any time decay that comes into the 10 o'clock time frame. Good morning, Midori. Let's see what's moving today. So we have the VIX going up. We have communications down. This is dragging down the rest of the market. So that's probably Google or Meta, one of the two. We also have real estate down. We have technology down. We have the financial sector slightly down. We have industrials and energy and staples. Very defensive market so far today. So let's see who's dragging down communications. Is it Google? It certainly is Google. And let's see what Meta is doing. Meta's not doing so well either. Disney is not doing so well either. Charter is, not much is going on in the communications sector. Let's see how Tesla's doing. Tesla down for the day. Amazon has been very weak lately. Is down today. Let's see, Microsoft. What has been super strong has been NVIDIA, and this is actually starting to come in. AMD, we've got some AMD positions. We're now right down at the short strike that we sold at, which is 95. So we're going to have to see how this one turns out for right now. And a lot of this will be determined on how this next pullback plays out. Let's see, Apple. Let's see what Apple is doing today. ExxonMobil has been relatively strong. Let's see how JP Morgan is handling the banking crisis, down from 145 down to 128. So far, a nice dip down there by the 200-day moving average. Goldman Sachs is well below the 200-day moving average. Hey, Juan, good morning. Good to see everybody out there. Welcome to Ready, Set, Trade for today. So what I'm looking to do is I'm going to be looking to set up. Now, we're getting some okay time decay. We're getting some decent time decay so far. And this is the normal weapon that we use. Now, there's all kinds of iron condors that we could set up. We originally, when we were starting this service about 3 years ago, we would start with expected move iron condors. So we were doing those. And something else that we've done, haven't done this in a while. Let me set these up here. We haven't done any time spreads for a while. We may get back into that at some point. So we go maybe like 7 days out, and we'd be selling something like a 39.70. In this case, we've got implied volatility for today is 29%, and a week out is only 18%. So that's a pretty good skew that we're seeing, and that's because we're expecting some movement today. So we're going to buy a calendar, and we're going to set the long option out to 4th of April. And so that's a $2,600 calendar, and it looks like this. So it's kind of the same thing as the iron fly, except you don't have much skew in these because you're using just either 2 puts or 2 calls. And generally, this can be a very, very fast trade as long as you have the back option not losing any value. That's very, very important to this. So we may look at doing these. Typically, these are better trades if you're anticipating the implied volatility to rise, which is usually better if you have very, very low implied volatility. This is a good trade to do if you have lower implied volatility. So let's watch how we'll watch how both of these play out. So we'll do a little bake-off today between the calendar and the iron fly. So right now the iron fly's got a little bit of a head start. It's up $40. So we are getting some time decay today. Now there's a good chance that we're already down to an expected move of 25. We started out at 27.5. We're down to 25.5. Chances are by 10 o'clock we are going to have to move down to a 25 wide iron fly. Futures are down 8 points. The Dow is slightly up. Again, on the market watch, we have energy is fairly strong today. The VIX is coming back down again. So we're starting to kind of normalize things. Let's go out to the Dow. Let's see what's moving on the Dow. Pretty mixed performance on the Dow. Nothing that's up is up all that much. Tech is generally down today. Let's go look at the NASDAQ as well. NASDAQ 100 is relatively mixed as well. What is up pretty big. JD, Baidu, these are Chinese companies, are up today for some reason. I don't know what MNST is. Is that Monster? Monster Beverage. Oh, so they probably had a split. 2-for-1 split. So that's why the price is way down. So that's skewing up. That's totally skewing up the results in the NASDAQ. But that's all right. No harm, no foul. We'll go back to sector spiders and keep watching those, okay? VIX has come down quite a bit. So now our opening range is about 9 points, which is tiny. And I want to see how this gap is handled today. Let's look at the market internals. For today, the market internals are rocketing higher. From a modestly weak open, they're getting much stronger. So we'll see how this plays out. Very choppy so far today. Let me know if anybody has any questions. We're going to be kind of in wait mode here for a while, and I can't place anything just yet until after 10 o'clock. And I may not be able to place it at 10 o'clock as well, too. We've got to see some good decay into this, and we're probably going to have to go 25 wide. In fact, what I'm going to do is I'm just going to go 25 wide right off the bat. So we're going to bring these down to 25 and this one up to 50. And then reset the credit. The credit will be smaller. We'll have less range to work with, but also less risk. Okay, getting a little bit of a move up. Can you use VWAP to do broken wing butterfly if the price falls above or below the VWAP? Yeah, I would. What I would do is I would wait for this to play out a little bit. So it's, obviously when you're looking at the average price after 5 minutes, there's not much information that you can get from that. If you're looking at the average price after 15 minutes, there's a bit more information that you can pick up from that, right? So you're getting more average price bars. I would wait, honestly, I would wait until the first half hour period. Give the information, some time to pick up some data on here, and then you can use that as a dynamic support and resistance. You could do that if you wanted to. So in other words, what Midori is asking is, could we set up a broken wing butterfly right now based on the price, heading above? Well, you could if you wanted to. So if we do something like that, we're going to go out to our puts in this case. And we're going to go to the puts, and we're going to go to the closest to a 35 delta. We're going to buy a butterfly, and then we're going to modify it. We're going to take this put option and put it one strike further out of the money, lock in a $1.20 credit, and so we're going to place this trade in the analyzer and see how this does. And we like this because the market internals seem to be heading higher at this point. We've got a gap above us. We could probably trade this as just a quick shot. See if we can get this to go higher by about 10, 15 points. You're not going to get a whole lot of time decay yet in something like this, but that's all right. So you're starting to see this perk up in profitability. This may be an okay trade. You could also do a vertical spread. Again, you don't have to make it as complicated as that. I like the broken wing butterfly for more of a fade trade. That's why I like that kind of like section of, so we could also play just a standard vertical spread down here if we wanted to. We could do, in this case, we could do like a in-out debit spread, like so. So make a 5-wide spread for maybe 250, 260, something like that. It's going to look like this. It's going to be much more of a pure directional spread if you do it like this. Right, this is a much simpler trade where it's just hyper-directional. In fact, when you do a trade like this, you're actually working against time decay. You're setting this up to defeat time decay. You don't want time decay when you do a directional trade like this, because that works against you. So there's all kinds of different options that you could pick for this. Let's go back to our Iron Fly. Iron Fly is picking up a little bit of value here, about $17, $18. Getting a little movement on the gap fill. Opening range is now 10 points. I'd like to see it at least 15 points if I could. Opening range still 10 points. Still only 10 points. That's why we like these non-directional trades, because you don't have to get this to move anywhere. Still staying above the A anchored VWAP for the day. But we'll see if this changes. So far, that's operating as support. It's acting as support. You can see that here. Nice little bounce off of there. Yeah, again, the biggest unknown about today is what's going to happen in that Senate Banking Committee. We may get a lot of, knee-jerk reactions from that, which ultimately, at the end of the day, may not create anything at all. Let's see how our other trades are doing. We're doing a bake-off between the calendar. Calendar is up $24, $34. Making hay here. Actually beating the Iron Fly. That's kind of what I would expect. The calendar, to me, is one of the fastest things that we've ever done. Here's the Breaking Wing Butterfly, which is slightly up. And here's the vertical spread, which is still about break even. Vertical spread, you're going to have to get a decent move. You can't just sit there and fibrillate around the price and expect to get anything from that. It has to actually move. That's the thing with a vertical spread versus a Broken Wing Butterfly, is that ultimately the Broken Wing Butterfly gives you a zone where nothing has to happen and you can still win, but it will take longer. So right now the time spread is winning. Time spread is winning. These are fast, but they are tricky. They are tricky, especially if the price starts to really move. Then you've got to adjust them because the skirts on these things move down so quickly. You know, if you step in front of a, let's say, a 60-point move, you could be down $1,000 on one contract. You cannot let that happen. Yeah, unfortunately, it looks like the market's just not going anywhere. We're not seeing a whole lot of time decay into the 10 o'clock. So the market's holding off until after the Senate Banking Committee. So this is going to be a non-starter for us today. Let me zoom out. Let's zoom out and see what's happening with the S&Ps. Now, here's the whole crux of the biscuit here, that we've seen these big swings. This is what's been happening really ever since August. Big swings, getting a little bit smaller. Right? We are just vectoring into the apex of the triangle. And so we're going to get some kind of big movement from this. I don't know when it's going to happen. It will happen when we get the movement that comes from here. Now, here's the X factor, which makes this super hard to figure out, because a lot of times we'll see an attempted break to the upside, which gets everybody leaning in that direction, and then something will happen to completely crack the market. We've seen that happen so many times over here, and a lot of those have been Fed-induced movements where the Fed comes along and just gets hawkish just when the market was starting to lean towards being bullish. This is what's happened in the past. The market senses the optimism, everybody leans into it, and then the Fed torpedoes it. I don't know that the Fed will be able to do that anymore. We could also have the opposite thing happen, where something negative comes along initially until people say, wait a minute, that means that the Fed's out of business and the market's on its own. We could see something like that occur. So don't be surprised if we see a little head fake around the breakout of this, which will juice the breakout even further and get this thing to really, really move. That's what I'm anticipating. So look at this. The daily price range has actually started to really, really drop here. If we go to ATR is starting to bend down. Remember, guys, the ATR of 60 points a day was the same value that we had back here in the great financial crisis. You know, this was back here. It was 62 points a day. We now have the same volatility from the worst of 15 years ago, is just a daily occurrence now. Isn't that amazing? And the peak, the all-time peak for history, was back here in the pandemic at 153 points a day. That was something. There was a lot of circuit breakers firing. We had a lot of limit down days. So we are going net nowhere right now. So the volatility is starting to come in. It's starting to actually come in, which is interesting. So is this the calm before the storm? Could be. So again, I'm not gonna wait past 10 o'clock. Once we get to 10 o'clock, we'll be over. This is a great time for any questions. If you have any questions, you want to bring anything up, But right now, what I'm seeing is that we're probably a non-starter for doing the 0 DTE today because the market's holding off and is waiting for the Senate Banking Committee. We will get volatility in the next 2 hours, but we're not going to get a whole lot of time decay in the meantime. Not going to get any time decay. Look at this. I mean, we set this up a little bit ago, and it's just, well, it's doing okay, but not to the degree that I'd like to see it. So I think it's just going to be very difficult to, we'll set something up and then you'll be twiddling your fingers for the next hour. So be cautious of this. Watch for, I think it would be surprising not to get a gap fill today. Gap fill is this green or a gray box. Gray box is the gap for today. And we may get a test of either the upper or the lower expected move envelope, either one of which, if it is successfully defended, could be a broken wing butterfly as a mean reversion trade back up to the middle. So very listless, very choppy, but we're not seeing a whole lot of time decay with today's market. So market's holding off until the Senate Banking Committee. It's going to see what happens coming out of that. Then we'll see all the time decay rushing out of there. And we'll probably see some good price movement as well too. Okay, anybody have any questions? Let's take one last look at the market internals and the sectors movement. We still have communications and tech are weak today. The banking sector is at least positive today. Energy and industrials and staples and utilities are the strong ones today. Again, very defensive, looking for, anticipating the worst, planning for the best, that kind of thing. Okay, guys, that's all I got for today. There's no trade today. It's just not going to move, and we're not going to get decay. It's this may happen today, and it may happen tomorrow as well too, because you have the Finance Committee in the House, and so they're going to try to make political gains from what happened in the banking mess. All right, everybody. Thanks very much. Thanks for joining me here today. No trade. We don't have to trade every single day. We don't trade when there's no edge. And right now there's no edge. Thanks, everybody. You guys take care. Bye now.